Russia has invaded Ukraine and the world's stock markets are reacting. So in today's video, we want to talk about how these events might impact your investments and whether or not you should consider making some changes to your portfolio.
Well, this wasn't much of a surprise, right? The world kind of expected this for the last couple of months. But you are right, the world stock markets get a little nervous when things like this happen.
So let's start with the first question of how this might impact our viewers and their retirement accounts.
Well, Amber, to get an understanding of how this might impact the world stock markets, let's take a look back at some other military conflicts in recent history. So our third-party money managers at Gradient Investments have put this slide together, and it really puts things into context. Now, again, the history is not a perfect predictor of the future, but we can get some idea. We look going back to Vietnam War, Gulf War, Afghan War, Iraq War, the last time in 2014 that Putin invaded Crimea. I mean, 4 out of 5 times these markets dipped. That was very reactionary, and then pretty quickly recovered. Even in Afghanistan, we had a downward market, and we came back quickly, but then over time kind of fizzled back out. So we can see that most times these political events are short-lived and don't have really negative long-term impacts on the markets.
And a good reminder from our money managers that put out these slides for us is that there are actually always other concerns going on. It's scary when Russia invades Ukraine or there's any kind of conflict like that, and we always worry and wonder, but war is not the only concern. There are a lot of things that are always going on in the world that impact the markets.
So Amber, they put together this nice slide that shows going back to 2008. I mean, we have, like I said, when Russia went into Crimea, when Brexit, when England left the European Union, when COVID hit, right? There's always concerns in the market. But I want to point out to our viewers that, particularly going back to this Russia concern, Russia will have a much larger impact to the European markets, right? We don't get our energy from Russia. Europe does. So they're going to have a lot more to deal with over in the European markets, the Asian markets, as opposed to our markets. We should be somewhat insulated from a lot of the negative effects this might have to stock markets in the world.
So we hope to see less disruption in our markets than maybe Europe will see.
I would think so, yes.
Let's take a look at some of the long-term impacts then of some of these dips and concerns that we've seen over the last decades.
So Amber, again, Gradient Investments did a great chart here for us. You'll see on this intra-year corrections occur every year. The blue lines on top represent where the stock market actually ended for the year as measured by the S&P 500. And the orange lines represent where it got a low, where it hit a low. So look back at even 2020 when COVID hit. The markets were down 34%. That rattled some cages, right? A lot of people got nervous. Guess what? Those who stayed in the market ended the year up 16%. So, that's one example. We go back to other examples of, look at 2011. At one point, we were down 19%. We ended the year at 0. We just ended even. 2009. Down 28% at one point during the year, ended the year positive at 23%. So these ups and downs in the market, they happen. So again, going back to the first question, what impact might these actions have over there in Europe? Hopefully very little. Hopefully they're just short term. Hopefully they're just one of the little orange lines here and we end up positive for the year.
So this actually brings us nicely to our second question, which is what action should you take? Should people be worried? Should they be in a panic? What should our viewers and our clients be looking at doing?
Well, Amber, first of all, we look at risk management on 3 levels. When we design income plans, retirement plans for our clients, we're having 3 levels of risk management. The first level is, are you invested according to your risk tolerance, right? Do you have way too much in risky investments for your age, for your time frame, for your comfort level? If so, that's the first problem, right? If this is making you really nervous, you probably have too much in risky assets and you should assess that.
All of our clients have taken this risk management assessment, but if you haven't done it lately and you're feeling a little bit nervous, you can go to myriskcomfort.com and take that assessment again and see if you're invested according to your risk tolerance and comfort level.
Yeah, you'll get a score that shows how much you should have in risky investments versus safe investments. The second level of risk management is having an advisor, right? An investment advisor who's guiding some of these decisions. So once we know someone's risk tolerance score, then we say, where do we put these? The last couple of years, we've been guiding our clients away from these international markets. The US has been leading the charge out of COVID. We felt like that was going to continue. So most of our clients have very limited exposure internationally, and they're invested here. So we just said, those European markets, those Asian markets will probably do worse in the near term than our markets because of that energy issue.
If you don't have an advisor that you feel like you can trust with this, you can go to workwithnewgen.com to schedule a 15-minute introductory phone call with us. So what is the third level of risk management that we do?
The third level is using professional money managers, right? These people who watch the stock markets every day in and day out. Let's put that back on the screen, Amber. There are always concerns, right? Professional money managers know this, right? They knew months ago that Russia was a concern, and they allocated investments accordingly. They may have made portfolio changes accordingly. Professional money managers all day long, every day the market's open, that's all they do. They watch for opportunities and concerns, and they invest accordingly. So with those three levels of risk management, our clients are very confident that we're going to get through this fairly unscathed.
If you are invested according to your risk tolerance, if you have a financial planner that you can trust who uses these very competent money managers, you shouldn't have to worry too much. What action should people take right now? Number one is to understand your plan. What do we mean by that?
That means your risk tolerance, right? Are you invested according to your plan?
And number two, concerns are normal. This one is self-explanatory. Everyone's a little bit nervous, but if you are adjusted according to your plan, you don't need to worry so much.
Right, there's always concerns in the market, that's right.
Is action needed based on my circumstances? This is something that you can bring up with your financial advisor after you have reevaluated your risk management.
Yeah, only if you realize that you are comfortable with the risk down here and you're invested up here, then there's an action to take. If you are invested according to your risk tolerance, and that hasn't changed, I specify that. If your risk tolerance hasn't changed, there is no need for action now. You should already be invested accordingly.
And with that, the next question is, am I taking too much risk? Again, this goes back to your risk tolerance. If you are nervous and your risk tolerance has changed, you maybe are taking too much risk, and you need to discuss that with your financial planner.
Exactly.
Most importantly, avoid all-in, all-out decisions. And we mean by that, don't make big, rash decisions right now. Don't take all of your money out or put all of your money in.
Yeah, so we don't move all the cash when this happens, right? So our portfolios have 5 levels of risk. If you're in the growth, go down to moderate growth or balance. If you're in the balance, go down to conservative. We don't have to pull you all out of the market. We don't go all in or all out based on what Russia is doing, for crying out loud. No, we can move that up and down the risk tolerance scale depending on your risk comfort level, but we don't get all in or all out on these short-term events.
So be sure that you are subscribed to our channel, because right now this is the best advice that we can give you, but the events are changing constantly. There are a lot of factors to take in, and so if there are changes, we will keep you updated.
Right, if this does turn into a longer term event, we'll tell you what actions you should take. But remember to subscribe, because you can make the rest of your life the best of your life.
Plan now to retire happy.